into this. Keep in mind, at 9 o'clock, we are going to be debuting our tip sheet, which we're calling the runner. So stick around. You got to be in here at 9, and we'll continue to dig into our upside opportunities as we look for this market to chop around a little bit in this pre-market in. So what do you got? We got morning momentum. We'll talk about catalyst. We'll talk about the runner, and we'll make another series of make it make sense. Real quick, just so that I'm making sure that I am in the correct rooms. We still have people coming in. Mike, yeah, I'm still alive. I made it. Eric in Northport, good to see you. Curl, David, Sandra, Stardust, Ed Mines with some emojis. Nothing changes. That's good. All right. So as we take a quick look at FinViz, just pay very close attention to what's going on in the futures, a little bit of a tick up. And as we said, we're looking for the S&P 500 to make a move probably toward that 6,500, 66 level. Dow futures popping 200 points after lighter than expected inflation data. So we'll dig into that in a moment. But once again, why are you joining us every morning? Well, at 9:30, if you don't know what we are, where you are supposed to be focusing, you are the exit liquidity for this market. And as we are noting this kind of movement in the market today, this was all pre-positioning ahead of the CPI report, and you're going to see a lot of positions being unwound. You're going to see a lot of action moving at this moment. Consumer prices 2.7% annually. We'll dig into that. We'll discuss the stocks that are breaking out and breaking down and obviously can reverse based on some of this news. We'll especially be digging into some of the names that we've been discussing this week, like Conagra. Make sure I'm consolidated, making sure I'm pronouncing that right. Somebody sent me an email about it, and we'll look at our top screens. But to dig into the macro before we get to the runner at 9 o'clock, let's pay very close attention to the big macro story from yesterday that actually slid under the radar for a lot of people because of the overemphasis on the consumer price index. And that is that President Trump is delaying tariffs on Chinese imports for another 90 days. Taco Tuesday, that's where we sit right now. And China reciprocated by shelving its retaliation as well. So now we're going out to September, October, November. We are now watching the Nikkei hit an all-time high as a result of this, and you want to pay very close attention to a lot of those names like Apple and Tesla and Shopify that are leveraged by improved sentiment in technology, and watch the auto exporters as well. Honda, what are you up to? Well, Honda Motors at ADR, seeing a little bit of a pop, and strong momentum coming on the backside of that 20-day moving average. Also pay very close attention to Toyota. A lot of people don't care about Toyota. I'm interested in it because it's cheap and has found consistent, nice little breakout moves, $10, $15 moves every time it's bouncing off that 50-day EMA. So a little stretched at the moment. Maybe wait out the next run, but just make sure that you're looking to actively trade a lot of these names in addition to the consumer cyclicals that are likely going to benefit as well. Again, Tesla, Apple, and Shopify, very critical to watch. On top of this, just note that if there wasn't an extension, there would have been immediate pressure on the semiconductors. Right now, you want to watch the SOXL, which is the leveraged ETF around the semiconductors, getting another pop, and all the semiconductor stocks are back in play, and that's going to include one of the breakout stocks that we'll discuss when we talk about the runner in about 10 minutes. But we do have to note, we do have to talk about the next concept, the next story, and that's the CPI number. Now, I did not get a chance to update this because we do this, that's a pretty lean operation. That's what we're aiming for here. But we came in, the expectation was around 3% on the core inflation, CPI number with a headline of 2.7. This morning, the number comes in lower than expected, despite the modest impact of tariffs. So consumer price coming in seasonally adjusted 0.2. The expectation was 0.3. We come in at 2.7%, and that is compared to the expected 0.2 and the 2.8. Excluding food, core increased 0.3, and this is important, 3.1% up on core, and that excludes food and energy, and that's where the focus remains on the issue around the expectations for a rate cut. Remember, Federal Reserve officials generally consider core inflation to be the better reading for longer term trends, and we are above that level. So despite the fact we have that headline, be very cautious and just be very aware at this very moment that that core number is elevated, and that is going to bring us next week into the conversation that is going to be led by Jerome Powell at the Jackson Hole, Wyoming symposium, where the expectations are going to be some sort of forward-looking insight into what's going to happen in that September meeting. As of right now, we are at a 90% probability of a rate cut in September. And with October, we are looking at a 63% probability of being 50 basis points lower. But once again, I return to the fact that even though this headline number was positive, it is that core figure that the central bankers keep their eye on. I am a firm believer that food and energy is probably what should be counted, right? Because at the end of the day, that's what people spend the bulk of their money on in addition to housing. But as I dig into the core numbers today, it really is a question of what, as the Fed continues to signal, what is the impact of tariffs and what would it look like if we had an acceleration in tariffs with China, say 3 months from now. So for right now, there's going to be a lot of interesting price action today. Just be wary of any potential fake out that may come if we continue to see a move higher, if we get to a technical point of being overbought, whether or not this actually becomes a sell the news type of event and leads us into next week. There really is an interesting component to this because the hotter than expected core print could force the market to reprice those odds, and that means yield spikes wobble, growth stocks wobble, but we're not seeing that yet. We'll be watching very closely on the TLT. We'll be watching bond prices today, and we'll continue to look for insight into where things may hopefully we can find out where things are going to be moving. If we look at bonds right now, paying very close attention to the 10-year, we are up 0.11, 5-year up modestly, and the 2-year up a little bit as well. We'll be monitoring that, and we'll be monitoring the U.S. dollar because, as we have said, strength in the U.S. dollar would be bearish for broader equity markets. Keep an eye on the UUP today, as that will give us more clues into what to expect next week with Powell's speech, and of course, what to anticipate in the next few weeks. In addition to that, I do want to just point this out. This came out of Morgan Stanley this morning. These are the 3 threats. Despite the fact the S&P being up this year, this is what the narrative is starting to shift to. And this is not anything you haven't heard on this show before and from us at TheoTrade. Despite a strong year-to-date rally, Morgan Stanley is warning on 3 core threats. The first is the cooling labor market, which we saw with that July jobs report and the revisions that have been taking place. Pay very close attention to what that September jobs report looks like. The concentration in the mega cap tech earnings. This is that limited breadth story that I have talked about. Pretty much the entire bulk of all of the returns are coming on the backs of just 7 stocks, and Microsoft and Nvidia are basically leading the queues. Everything else in the bottom 493 of the S&P 500 not looking too great. So just watch this, because if this starts to unwind, that is where things can move very, very quickly to the downside. Continue to watch the FNGD, which is our ETN that we watch for a potential breakdown in stocks, and the concerns around stagflation. Once again, the concerns about tariff-driven inflation, that core number at 3.1%. Obviously is a challenge. Keep an eye on the following tickers: Nvidia, Apple, Microsoft, right? It is that tech concentration risk, everybody getting into the same pool and the water starting to overflow. On the other side, it is the concerns around consumer discretionary stocks. If the economy is slowing down and prices are rising, what that will look like. And we have to be paying very close attention to job openings and more Fed-sensitive names, things that are in the consumer defensives that are getting beaten up right now because of higher interest rates. Those are your top macro trends to be watching this morning. Real quick question: what numbers do you consider to be the most important on a company's balance sheet? That is a loaded question, but nonetheless, the simple answers on this. you're going to obviously go right back to, to figure out whether or not a company is healthy or not. I always want to focus on what is in the Piotrowski score. So once again, as we talk about core things, I'm just going to go back to a handful of things and answer your question quickly. First is going to be cash and cash equivalents, because cash is oxygen and cash flow is the story of whether or not a company's balance sheet is healthy. It is the short-term firepower a company has. Can it actually finance its growth? So right now, Tesla, for example, Tesla's growing at this massive rate and has this huge move that's already it continues to transpire, but it is based on the dream of whether or not it becomes an AI company. The key thing here, though, is they might not necessarily have the cash flow to deal with it. This is something that happened to Meta. Total debt is obviously critical. Debt kills in downturns. That's why you have so many stocks that are heavily shorted. It is because of the debt. Pay close attention to the current ratio. That's the current assets divided by the current liabilities. A high number or a low number is liquidity stress. A high number means they're hoarding cash. Watch accounts receivable and inventory. Watch retained earnings, and watch book value. All right, let's move on. So on top of that, we have momentum. And we got 3 minutes because we're going to be diving into the runner in 3 minutes. So we have this equation that we do. We do it every single day. We take the number of stocks that are breaking out versus the number of stocks that are breaking down. This gives us a momentum reading in the short term. We do this with every single index. We do it with the S&P 500, the NASDAQ, and the Russell. Typically, I've only shared the S&P 500, but since the Russell has gone negative in the last couple of days, I've found it pertinent to point this out because the Russell stocks have been the ones that have been under deep pressure because of debt, because of broader concerns. I'm looking at the Russell right now to come out of red territory, particularly with such an emphasis right now on rate cuts in September, that I think we can retest that 226 level within the next few days if momentum returns to this. But when we see this negative number for the S&P 500, we go over to something called the FNGD. And the FNGD is a leveraged ETN that tells me about liquidity stress in the market. I don't care what everybody else says what it does. It has told me and has warned me time and time again of potential stress up at the top of the S&P 500. Every time this breaks its 20 and its 50-day moving average, there has been some jitters in the market, higher volatility, and when this breaks above that line, that's kind of where I have to start playing defense and think about hedging, taking profits, and possibly even shorting the market. Right now, we are nowhere near our 20-day moving average, which means money continues to pour into those top stocks, continues to crowd into those top stocks. Leverage is healthy, liquidity is healthy, despite the fact that everything else is selling off. It is continued propelled rocket fuel for the S&P 500 for now. We'll continue to monitor this every single day as we do and look for opportunities if this market does start to break down. Water. Very good. All right. Checking in with the chat. It is coming up on 9 o'clock. And as I promised, we have something new that we're going to be adding. And I'm going to walk you through exactly what it does. We are talking about a new tool that we are releasing today, and we're calling it the Runner. It's a pretty simplistic tool. It's basically what you have seen with us before, but once again, looking through the state of the market and give you a little bit of a rundown of what we are trying to do here. So what we have here is a pretty simple little concept. We are walking you through a document. I'm going to pull it up right now. And I want you to think of this as a horse race. I want you to think of how the market actually operates and what we are specifically trying to do each day when we're looking for breakouts and breakdowns in this market. So rather than just simply walking you through the, just to walk you through this, what you have here is the very first volume of this. We're going to do this every day at 9 o'clock. And the simple element of this is instead of having things broken out, you're only going to be able to get this in this room. It's going to be released at 9 o'clock. It's going away at 9:20. Okay? Because I think it's very important that one of the biggest problems and one of the biggest challenges of doing a show like this is that people come back and they ask a lot of questions and they'll say, I missed this. Well, the reality is the stocks that I talk about at that exact moment, those are the only times to actually talk about those stocks. These lists change all day, all day. So this is what I'm looking at 9 o'clock this morning, and that's it. This is the opportunities that I see on the table, and these are the things that we want to be focusing on. So we're going to be digging deeper into this, and then at 9:20, this goes away because it's not going to be relevant the next day. And these are the things right in front of you that you need to be keeping an eye on and be active with today, because there's going to be something in this sheet that's going to lead to a significant opportunity. So when you go to a horse race, you see a huge thing, you're looking for the one specific opportunity. And I go back to a book, and I'm going to point it out right here, okay? This is a pretty simple book. This is one of the most important financial books that has ever been written. It's called Value Handicapping. It's written by a guy named Mark Kramer. The entire purpose of it is you don't bet every race. You don't make every trade. You look for the opportunities as they emerge. So let's dig a little bit into this and talk a little bit about some of these names, because the entire premise of this is based on the idea of what are we looking at right now that gives us an opportunity. Just going through 3 of these, print it all you want. Print it all you want. But it's not going to be in this room at 9:21. I'm just going to tell you that right now. All right, so we look at a company like STNE, which from an opportunity perspective is interesting because you just had this sell-off and this stock bounced right off its 20-day moving average. Right here, technology, software, infrastructure. These are the stocks that have been getting crushed in the last couple of months, largely because of concerns around their debt. What we are looking for right now is a breakout move and a continued move here on that 50-day moving average. Looking for a trade, relatively simple, right? Setting up a spread to the upside and buying in the money at the 14 and selling to the outside. What you're looking for here, which is pretty simplistic, you're just looking for continued strength. If this breaks down to that 14 level, you get out. You're looking for opportunities, strength continuing here, RSI, MFI, MACD, ADX. That's what we're looking for. We're specifically looking for these indicators to line up and give us an opportunity to make a trade that has low downside and higher upside toward that $16, $17 level. STNE is on that list. In addition is MU. Now, this is where it's going to get interesting today. And the question is, how strong will the SOXL remain? How will the semiconductors respond to this ongoing situation with China, and how will they respond to this core element with the CPI today? If Micron continues to run, Micron has a lot of strength to the upside. You're seeing very strong momentum, and you're seeing this move on this histogram here on the MACD. This can get into oversold territory relatively quickly, but you're just simply looking for a move up toward that 130 level. Pay very close attention to this. Micron, all of those other names are back on board, as is Etsy, because consumer cyclicals may be making a little bit of a rebound as well. Looking for this as well back up to that $65 level. On the other side of the breakdown, you have a lot of stocks that are just breaking under these key moving averages, and I want you to watch UAN, which is agricultural inputs. This stock's either going to bounce off its 50 or it's going to have more downside as a result of breaking under these key technicals. UAN is is CVR Partners, and in addition to that, looking at NN, so next nav. Looking at this chopping around, if this cannot hold and get back above its 20-day moving average, again, technology infrastructure rolling over. If it does get back above that 20-day, that's going to be your line in the sand to actually go in the opposite direction and look for a potential bounce. Keep a very close eye on these 20 and 50-day EMAs, particularly around the names that are on this list. Finally, on the momentum side, Kohl's. I don't like this company. I don't shop there. I don't care. It's just a matter of using what the market is giving you and giving you support right now on that 200-day moving average. This is a very high shorted stock, and it's entirely possible that today you continue to see more short covering as a result of expectations for rate cuts heading into September. Ride the momentum and keep a tight stop. Very simplistic. In addition to that, we're looking at EGO, which is another name that has popped up. Gold price is breaking. If EGO cannot hold this 20-day downside, if it can hold it, and we see weakness in the dollar, EGO and gold moving higher. Remember, the road points toward more monetary inflation in the future. if you are not in gold, you're constantly looking for opportunities to trade it. Remember, keep an eye on the GDX and watch that 50-day line, watch that 20-day line. And if we get back down here, look for a potential reversal back to the upside. Long-term gold will be fine, but right now, because of the chatter around exports and tariffs, there may be some weakness in the near future. All right, so 906, to dig a little bit deeper into this, we're talking about sector momentum and things that we're looking for with the utility side, utilities remaining very, very strong. Now, did you know we will deal with that? I think it's very important to have color in, but that's me. Did you know that the XLU and that the utilities are the second strongest sector of the last 6 months? These stocks are trading like growth stocks. And that's an absolutely wild thing to see because everybody has historically viewed utilities as a place to go out and try to just get some yield. Well, the reality at this moment, utilities are up 10% in the last 6 months, trailing technology. There's a reason for this. It's not that complex. It's called AI. So the expectations, again, with utilities, this is something that a lot of people have never seen before. They've never had the idea of actually trading a lot of these utility stocks like they are momentum stocks. So long as the XLU remains above that 220-day moving average, you want to pay close attention to NEE, right? Some of these names. This is seeing consolidation on that 50, that 20, and that 200. We're looking for this to pick a direction soon. I would look for the upside in names like NEE for the short term. And I'm obviously paying very close attention to Southern, Constellation, Duke, and Vistra, all on that list, all strong momentum, all continuing to charge higher on the AI trade. But again, under the radar because they are not named NVIDIA or Apple. On top of that, looking at the other side, oil has been under pressure the last couple of days. And it's been interesting to see that we're getting a little bit of a pop here, but the weakness does still remain on these names. When we're trading around energy and trading around oil, we need to move down into these lower levels of time frames, looking for energy to move into overbought or oversold levels. We have not really seen that in recent days. The MFI did have a little bit of a draw down to back on Friday, but we're not seeing significant moves. The trend on energy is to the downside. It has been to the downside for the last couple of months, but people aren't paying too much attention to that. If you are trying to short energy and you're seeing weakness on volume and you're seeing weakness on some of these other indicators, make sure you focus on the names that are higher beta in the energy space, particularly upstream oil and gas. Now, today, right now, as we look at it, crude continuing to break down, a lot of emphasis and a lot of focus on China and the U.S., but keep in mind that OPEC is expected to increase its production. And once again, the concerns do remain about the stability of the U.S. market, the U.S. economy, the consumer. So once again, watching energy looks like it's going to continue to break down. And I don't like to try to make a big significant reversion trade on something like oil unless we are oversold on the OILU. When we get too oversold on the RSI and the MFI, that's where it is an opportunity to go lottery play and look for a company like APA to make a move to the upside very, very quickly as short covering is completed. But right now, watching energy, still weakness, not a lot of confidence going long on upstream oil and gas at the moment. Going to continue to recommend that people stay in the midstream, focus on the names like ET, collect that money, collect that dividend, and use that capital that comes on a quarterly basis to actively trade and look for continued upside and appreciation on those pipelines over the long term. The final thing I just want to point out, and this is to go through just the horses to watch, the things that we're paying attention to, the things that we're looking for breakout. Look, we have a great editor over here at TheoTrade. He will not be named, but he will be commended for his ability to point out on Sunday that the Trump administration made a decision to host a dinner of cannabis enthusiasts. And the story simply was, hey, we're going to possibly declassify these cannabis to a weaker state of drug. Resultantly, it was one of those things where I was too focused on other things. I didn't go long True Leave, which I should have done. Tilray is up another 20% today. These are heavily shorted stocks, by the way. So Tilray getting a big squeeze. Look for these to continue to run. One of the ways to trade something like Tilray or trade something, any of these stocks that are in the cannabis space, when you are trading them, you're going to focus on what is called volume weighted average price. I'm going to walk you through that in a moment. But for right now, it's both Tilray, and I don't know if I can get this stock on this. I can't. It's truly TCNFF, which is also, there you go. True Leaves up another 5%. Expect these things to keep running. And a retest of some of these levels. This was a stock trading in the 50s back in 2021. This cannabis trade can get out of hand very, very quickly. But make sure that you are holding stops and don't start putting too much capital into this. Your lottery tickets are going to be built around the cannabis space for the next couple of days. On addition to that, pay very close attention to Celsius. Just pure momentum right now. The stock is moving into the stratosphere on the RSI. It's MFI. It's still got some room to run, but this is actually a name that I'm looking to potentially reverse relatively soon. Just keep in mind that we are elevated at this moment. And what I will be looking for, just in case we get any potential bad news, I would be looking for an opportunity to go back down here at the $44 level, but give this a little bit of time to marinate. Finally, a stock that has been getting its teeth absolutely kicked in over the last couple of months is Mondelez. This is a consumer defensive, and this is just absolutely beaten and battered. MFI, RSI, all the way down and oversold. You're seeing the histogram start to narrow a little bit on the MACD. The worst could be over soon, and one of the things that I'm looking for at this moment is whether or not insiders will step in and buy. This is an opportunity to go high probability trade and sell spreads to the downside instead of trying to speculate on a complete reversal. But I will say this. If we start to climb out of the RSI and MFI at oversold, that's an opportunity to take a shot back up to maybe that 200-day moving average. Be very patient with this and make sure that you time this as much as you possibly can. But right now, oversold conditions on a consumer defensive, if the expectations for rate cuts come and the expectations are that some of these companies are going to be able to address some of their debt situation, hopefully. Well, this does have a little bit of reversion upside to it. Doesn't mean that the worst is over the long term. These stocks can definitely continue to break down and chop around. But we have seen, a very significant downturn here that aligns with where we were back in late October of 2023. And that was back when the company was facing debt issues because the 10-year bond was moving up to 5%. So Mondelez oversold, and that is our last stock today. So you have to be in this room each day to get this. I'm not going to make any exceptions on it. We can't make any exceptions on it. It is part of this show, and it will drive a lot of the way that we analyze the markets moving forward and give us something actionable to focus on every single day. So I hope that you enjoy it. I hope that you get a lot out of it. Tim, getting here just in time to get a copy of The Runner, which again is up at the 9 o'clock period. Make sure you get a copy of that and be active with it today. On top of that, when we talk about our replays, I am not going to go through every single stock on this thing each day. Instead, what I'm going to do is probably take one each and go through it. And then all of the other value will be in, again, educating you on what specifically we're looking for, because most of these stocks are aligned when it comes to breakouts, breakdowns, momentum, sectors, and the horses that we are watching for potential continued breakout, reversion, or breakdown based on their specific conditions. All right. So the last thing, and I'm going to slow it down tomorrow, I promise, because I'm going to have less to talk about. Garrett, how do you do VWAP? Okay. This is when we are talking about stocks that are potentially running, and I mean running. Always pay attention on FinViz to the stocks that have unusual volume. Christopher French, I know him. I wonder if that'd be hysterical. That might be my ex-boss. Pay very close attention to unusual volume. Pay very close attention to stocks that are breaking out and breaking down in significant ways. Because if there's a lot of volume, there's a possibility for reversions and stocks that are burning much, much higher. If we look at Tilray today, TLRY, you could see we're already, you could see we've already had this big gap up move this morning. But I do want to point something out. When the market opens, if this breaks down, if we get down to the 101 level, if we get down to the 98 level, if there is a sell-off, pay very close attention and look for a possible reversion, or to just simply trade the stock above this blue line, which is the volume weighted average price, following it as it breaks out. And then if it is under that blue line, simply let it go. Now, we talk about volume weighted average price because I also integrate Bollinger Bands on this. I'm specifically looking for reversions every day with the S&P 500, with the Russell, and with a lot of other equities that are very high volume. The very first thing that you're going to do when you get to TradingView is just simply type in a ticker. Now, you might have to move a couple of things around, but you type in the SPY, and now all of a sudden you launch it, and we have, let me pull this stuff out. It just likes to reset every time that I leave. You will get the price of the stock. Now, you can see this is all pre-market. Pretty simple. Is the FNGD regular hours or not? Do you pay attention to the pre-market chart? I do not pay attention to the pre-market chart. I'm only focusing on the daily chart. And if it breaks during the market hours, then yes, I will sound the alarm a little bit, send a note out to people. But for the most part, it's really end of day that matters most. All right, so the SPY. So you're going to type in volume weighted average price. Okay. What will come up is the first standard deviation of this blue line. This is the 1 minute price, and this is effectively an institutional anchor for the day. Now, I'm not focusing on the first and second standard deviation. I'm focusing on the statistical bands, which add 2 and 3. There's a little widget next to the VWAP session, and you will now add the second band and the third band standard deviation. What that will give us is 3 standard deviations of price. Specifically, what I am looking for at all times is a move on the volume weighted average price down into the third or even fourth standard deviation, particularly the fourth. We get down into the fourth standard deviation, that is typically where we will see algos step in and bid. And for higher conviction, the other thing that we add, and if you have not, you still can probably access the Tesla masterclass, and we're going to do another masterclass at some point soon that is really anchored around a lot of this type of trading, is we also add Bollinger Bands. And the reason that we add the Bollinger Bands is that this adds a little bit more conviction when looking for reversals. So what we have seen is a move outside the 20 adjusted, the 2 standard deviations of that 20 adjusted, and volume weighted average price. When we break out under these levels, we look for a bounce back first to the midline on the Bollinger Band, if not then all the way to volume weighted average price. There's multiple ways to trade this. This is a very good intraday tool. If you are not an intraday trader, it's not for you, and that's okay. But if you are a person who is looking to scalp, and you're a person who's looking for opportunities to try to find reversals, or you're looking for higher volume stocks that can give you the potential to identify when stocks may break out or even reverse and break down, because again, if stocks break out of the Bollinger Band and move into the fourth deviation to the upside, high probability that a reversal is coming and a potential move back to the anchor. That is volume weighted average price. I will be digging deeper into this as we move later. I'm going to be shifting in the next couple of weeks to also adding the final hour of trading. And that's where we're really going to be focusing on this, largely because of the reversal patterns and the institutional pickup that we see at the end of the day. As we head into September, if we see weakness in this market, if we see deep concerns about the state of the economy, the reality is that in the morning we will potentially see these big pops and then reversals. Nothing really happening during the day, a lot of chop, but it's when we get into that final hour where the institutions come in and there's a lot of potential institutional covering at the end of the day, that creates late last 20, 30-minute opportunities using volume weighted average price and Bollinger Bands to identify potential rebounds and to try to take advantage of it using short date options. So we'll be focusing on those trading strategies moving forward. In addition to that, that is for people who are in our member room. Still time, just sign up, join us. Don is going to be kicking everything off in the member room at 9:30. And as always, I will be back here tomorrow at 8:45. We are going to be deleting the runner from the chat in about 15 seconds. So again, if you haven't downloaded it, do it now. Every day that we are here at 9 o'clock, you'll get a copy of that. We'll walk through a couple of the trades. Just download it and we'll go from there. I hope you guys have a great trading day, and I will be back again tomorrow, 8:45. Don's coming in right now to start playing some music. Take care, everybody.